Hello everyone, and good morning, and we apologize for a technical delay, but yes, we are back here again with the presentation, and this presentation is for the upcoming IPO of IRM Energy, which will open on the 18th of October. So we have three distinguished guests here. We have one from HDFC Securities, which is Mr. Deepak Jasani, who heads the research retail part in HSL. And then we have the distinguished guest from IRM Energy. We have their CEO and the CFO who's joined in here. And they will introduce themselves as we go on. But first, over to Mr. Deepak Jasani for a small insight on IRM. Thank you.
Good morning and welcome to this webinar on the IRM Energy IPO. The company has been promoted by the Cadillac Group, is into the CGD business. So two positive ticks on the IPO. The company has started with limited geographical areas, but it is fast expanding. In terms of size, in terms of comparable peers, I think we have Indraprastha Gas and Mahanagar Gas, which are directly comparable, and Gujarat Gas to an extent. All these three companies are considered to be defensive companies and growth companies at the same time because of the huge potential in the CNG and PNG segments, with the government emphasizing a lot on reducing the carbon footprint and encouraging the gas-based fuels. So I think here we have a company which is which fits into most parameters of encouragement from the government, the listed peers growing quite well and being valued quite well. So now we will hand it over to the company officials for a presentation from their side, and we will take some Q&As at the end of the session. So now over to you, the officials, Harshal, Mr. Harshal and Mr. Kaushal.
Yeah. Good morning, everybody, and welcome to the webinar. So start off to introduce myself. I am Karan Kaushal and I am the CEO of IRM Energy. I have been with the company right from the start when the company was incepted in the year 2016. And prior to joining IRM Energy, I was with listed companies like Kalpataru and KEC. And I have more than 15 years of experience in project management, business development.
Good morning, everyone. Myself, Harshal Anjaria, I am CFO of the company. I am associated with this company since day one in 2016. I am chartered accountant by profession and have 15 plus years of experience in oil and gas and petrochemical sector itself. Prior to IRM, I was associated with GSPL, ONGC Petro, and I have 5 plus years of overseas experience. To brief you on the offer details, the current issue is from IRM Energy Ltd. The price band is announced, the lower end at 480 rupees and the higher end at upper end at 505. It is pure fresh issue of up to 1.08 crore shares of rupees 10 each. There is no OFS. The issue is proposed to be open on 18th for public and it will close on 20th. Shares are proposed to be listed at both NSE and BSE. The end use are categorized into three. First, is to fund the capital expenditure for the new GA of Namakkal and Tiruchirappalli GA of around 307 crores to be spent.
Hello. Is there a technical issue at your end?
phone ka? We can't hear.
Yeah. Are we audible?
Yes.
Yes. So current issue is from IRM Energy Limited. The price band has been announced. Lower end at 480 and upper end at 505. The issue size is fresh issue of 1.08 crore shares of rupees 10 each. The issue dates will be open for public on 18th and closure on 20th. The shares are proposed to be listed at both NSE and BSE. The end use of the proceeds are categorized into three. First is to finance the capital expenditure for the new GA of Namakkal and Tiruchirappalli up to September 2026 of amounting to 307 crores. Second is to prepay a certain portion of the outstanding borrowings of close to 135 crores. And third is the general corporate purpose. BRLMs to the issues are HDFC and Bobcaps.
Brief you about the executive summary. We are a growing city gas distribution entity, well spread across the geography of the country. As you can see on your screen, that we have two geographical areas in the state of Gujarat, which is Banaskantha and Diu and Gir Somnath. We have one geographical area in the state of Punjab, Fatehgarh Sahib, and we have one geographical area in the state of Tamil Nadu, which is Namakkal and Tiruchirappalli. The business model of this company is very simple. We are in the business of city gas distribution, supplying gas to domestic households, industries, commercial, and also setting up CNG stations in areas where we have been authorized for. In a short span of more than 7 years, we have set up a distribution network of 66 CNG stations. We have an operating pipeline network of around 4,000 inch kilometer. Our industrial base is, we have 184 industrial customers, we have 270 odd commercial customers, and we have more than 52,000 domestic household connections. In our sales mix, it is balanced, it is not skewed to any specific segment. We have 50% sales coming in from the PNG segment and 50% sales coming in from the CNG segment. We are the pioneers of use of technology in running our utility operations. We have been using the latest technologies in this field like GIS, SCADA, AMR. All our pipeline network is mapped onto a geographical information system, and we use remote technologies to operate our CNG stations. A Japanese company, which is the fourth largest company by natural gas volume, has chosen to invest in us, and it is a long-term technical partnership, and they are helping us to improve our city gas operations and bringing in best practices from Japan, where city gas distribution is a very mature industry, more than 50-year-old industry in Japan. So that is a partnership which we are very proud of. Our volumes have been consistently growing. Vis-a-vis FY22-23, our volume grew by 30%. We did a volume of 196 MMSCM. Our revenue last year was around 980 crores. Our EBITDA was 118 crores and PAT was 63 crores. The healthy ratios of ROE, ROC of 18 to 14%. To describe about the evolution of IRM Energy over the years, we were incorporated in 2015 and we were authorized for the two GAs, which is Banaskantha in Gujarat and Fatehgarh Sahib in Punjab in 2016. Pursuant to these authorizations, we started our city gas distribution project rollout, and in less than 1 year, we commenced our operations in both our geographical areas, which we got in 2016. We added a new GA of Diu and Gir Somnath in 2018 in the 9th bidding round, and We have also incorporated some joint control entities and invested in businesses which are allied and synergic to our operations. And we have invested in Farm Gas Private Limited and Renuka Polymers. We were awarded the City Gas Distribution Growing Company of the Year by FIPI, which is a body recognized by Ministry of Petroleum and Natural Gas. Very few companies in this business are able to meet the MWP target. MWP is the minimum work program which is given by PNGRB, which is the regulator in this business. So we have met the targets given by PNGRB for both our GH which we got in 2016. For Banaskantha, we met it in October 2021, and for Fatehgarh Sahib, we have met it in June 2023. We added one more lucrative GA of Namakkal and Trichy last year in the 11th bidding round by PNGRB. And the Suzuka gas investments came in 2 tranches in September and December 2022. Moving on to the key investment highlights in this company. To start off, that our existing geographical areas are very lucrative in terms of the sales potential and are yet under-penetrated. We are on a growth cycle. We are yet to reach the maturity stage. In FY23, we did an average sales volume of 0.54 MMSCM, which is 540,000 SCMD, standard cubic meter per day. This volume is expected to rise by 3 times by FY27, out of which the 3 GAs will significantly contribute, and there will be also a 30% contribution coming in from the new GA which we got last year. We regard ourselves to be very successful in project implementation, and we are very fast and quick in our city gas project rollout. In a short span, we have set up CNG filling stations, and there are 2 SCOPO stations which we are having, and 36 dealer-on-dealer operated stations which we are having, which is our own company branded stations with our own corporate identity. We also rely upon the oil marketing station network, and 28 of our stations are located in these oil marketing stations. There is an investment from Suzuka Gas, which is very, very, very helpful in improving our city gas operations. There is a joint technical committee now which is evaluating methodologies and good practices to improve the business efficiency side. And there is a great chance that we can harness potential breakthrough technologies coming in from Japan and employing it in the Indian city gas market. To cater to this huge requirement of gas, we need to get into strategic gas sourcing arrangements, and we have contracted RLNG volume from all the leading gas suppliers in India. We have a contracted gas volume of 350,000 SCM per day, and these are mid to long-term contracts, and we are very prudent in entering into gas sourcing arrangements so that we can hedge ourselves with any global upheaval or any spike in the gas prices in the global market. We have a balanced mix of CNG, PNG, and our sales is not skewed to any specific segment. We have gone in for value chain integration and invested in businesses which are synergic and allied to our core business. And this, as Jasani ji said, that this is a company backed by Cadila Pharmaceuticals. And we are Cadila is a 30-year-old company, which is a pharma company based out of Ahmedabad, and they are helping us in the allied functions like IT, HR, taxation. And this is a company with a strong corporate governance framework in place, guided by an experienced board and a strong management team.
To give you specific information on GA wise, first we'll discuss about Banaskantha GA. The authorization for this district was received in 2016 under the 6th bidding round of PNGRB. This GA is well connected with the GSPL trunk line, and we have taken a tap up from their network. Talking about geography, this is the largest district of the state of Gujarat, excluding the Run of Kutch, with an area of around 12,000 square kilometer and population of 3 million as per census 2011. In terms of registered base of vehicles, there are close to 230,000 vehicles, out of which close to 55,000 vehicles are already operating on CNG. In terms of demand, we did an average volume of 0.2 MMSCMD in FY23, and it is expected to reach a level of around 0.4 by FY27. 90% of the volume is coming from the CNG segment. In terms of MWP commitments, as we highlighted earlier, we have already met the targets for inch kilometer and domestic PNG connectivity. And while there were no targets for CNG stations, but depending on the requirement, we are kept on increasing our CNG footprints from 5 CNG stations in FY18. We are operating 39 CNG stations as of June. While there are no additional targets for domestic connections, our earlier targets from the PNGRB was only 28,000, but we have already connected more than 44,000 households in this GA, and we will continue to ramp up the connectivity as and when the requirement for market comes up. In terms of opportunities, we see a lot of floating traffic passing from this GA because this GA shares border with Madhya Pradesh and Rajasthan, and a lot of vehicle passes through our district. There is a western dedicated freight corridor also under construction, and which passes right through the Palanpur city, which is the single largest city of this district. Also, there is a upcoming national highway coming from Jamnagar and connecting to Bathinda, which also will pass from Tharad, which is another city of this district. And once this NH is up and running, we'll again look to have multiple CNG stations around this national highway to cater to the floating demand. There is an upcoming IF base coming up in Disa, which is another biggest city of this district. And once this IF base is up and running, we'll see floating traffic and domestic connectivity demand coming up. One thing which we wanted to highlight here is there is a new segment for CNG demand opening up, which is the LCVs and the MHCVs, which are nothing but 10 tonners to 18 tonners of goods carriers. And there is a huge traction coming up for retrofitment and also sale of new vehicles under this category, which are operating on CNG. Banas Dairy, which is the biggest dairy of Asia, has a fleet of around 8,000 vehicles, which ferries milk and milk products across Gujarat and other parts of the country. And we are in active discussion with their management to convert their fleets, which are existing, being used on diesel, to come on CNG, because the diesel price is at around 92 rupees in Banaskantha, and we are selling CNG at 74. So apart from price advantage, there is also a mileage advantage to the fleet owners, and we are seeing a good traction in terms of conversions.
So, ladies and gentlemen, moving on to the next GA about Fatehgarh Sahib. This GA was also allotted to us in the 6th bidding round in 2016. This GA is in the northern part of the country, very near to Chandigarh, and a major town in North India, which is Ludhiana. And it is on the natural gas pipeline, which is being maintained by Gas Authority of India Limited, right on the along the national highway from Delhi to Amritsar. A small GA in terms of area, with a small population of around 6 lakhs and a very small registered vehicle base. But here there is a industrial cluster called Mandi Govindgarh, which is called the steel town of North India. In Mandi Govindgarh, there are more than 400 industries, out of which 90% of industries are steel derolling mills. So that is the upside about this GA. Regarding the MWP, we have already met the inch kilometer and domestic PNG targets given by the regulator PNGRB, and we are operating 9 CNG stations. Most of them are on the national highway from Delhi to Amritsar. Moving on to the demand, we did a sales of around 3,20,000 average sales in the year FY23, which is expected to grow 2 times, and we will be doing a sales of around 0.6 by FY27. The sales is coming majorly by selling natural gas in the industrial segment. Out of the 400 industries, we have a connected industrial base of 180 odd industries in Mandi Govindgarh. This cluster was one of the most polluted cluster in India, and the industries were using polluting fuels like coal, furnace oil, petcoke. And when we got this area, we started rolling out our pipeline network. And in 2 years' time, once we when we when once our network reached a critical size, the local pollution control board and National Green Tribunal took cognizance of it and asked the directive for these industries to switch on to cleaner fuels and give up the usage of polluting fuels. So we are in the middle of an energy transition in Mandi Govindgarh. There are still industries to be connected. We have a pipeline of around 80 industries which are yet to be connected, which have registered, and we will be connecting them very soon in the next six months to 1 year. So that is why we are reasonably confident that this volume will continue to grow in the next 2 to 3 years. And by fourth year, by FY27, we will be doing a volume of 0.6, that is 6 lakhs SCM per day. There is a additional information which is to be shared, that there is an upcoming pharma and textile park which has been asked by the state and the central government, and all the environmental clearances, statutory clearances are in place. The state government is bidding out the land parcels to the interested industries. So this is the demand which we have not factored in our projections. So we believe because of the ecosystem in this industrial cluster of labor, water, and electricity, there is a huge upside of increase in the demand in the industrial PNG segment.
To give you overview on the third GA, Divan Gil Somnath, we got the authorization from PNGRB under the 9th bidding round in September 2018. This GA is also well connected with the GSPL network, and we have taken tap-up from the GSPL pipeline. In terms of area, this is relatively smaller district with a population of around 1.2 million as per census 2011. Registered vehicle base also is lower as compared to other GAs. In terms of demand, we did an average volume of around 0.023 MMSCMD in FY 2023, and this is forecasted to reach a level of around 0.1 in FY 2027. In terms of MWP, we are on the beginning of the fourth year of MWP as per the authorization, and we have already met the inch kilometer and the CNG stations yearly targets. For domestic PNG, we have recently connected Veeraval city, which is one of the largest city of this district, and there are potential close to 24,000 households, and we are ramping up our pipeline infrastructure in the Veeraval city, and will look to connect bulk of the customers. In terms of opportunities, there is upcoming Chhara terminal being constructed by HPCL, which is expected to be commissioned by end of Q4 or Q1 of FY 24-25, and Veeraval, which we have connected with the LCNG hub, wherein the gas in liquid form is being transported from the Dahej terminal to Veeraval city, traveling a span of around 600 odd kilometers one way. Once this Chhara terminal is up and running, we'll take the LNG in liquid form from this Chhara terminal, which will significantly reduce our transportation cost. We see a lot of tourists coming up to this GA, because this GA is home to 3 famous tourist destinations of the state, including the Somnath temple, the Gir forest, and the Diu. We see a lot of floating traffic passing through this GA, not only during the weekends but also during the holiday season.
To give you the overview about Namakkan and Trichy geographical area, which we won in last year in the 11th bidding round. Just to explain you the geography, Trichy is right in the middle of the Tamil Nadu state, and there is a natural gas pipeline passing through Trichy city. The name of the natural gas pipeline is Ennore Tuticorin Natural Gas Pipeline, which is built by IOCL. In the last 15 days, they have recently commissioned this pipeline, and gas is flowing from Ennore to Tuticorin. So we have a seamless natural gas pipe connectivity now. In terms of area, this is around 8,000 odd square kilometers of area, and the population is 44 lakhs as per the 2011 census. This population adds up to the population of our existing 3 GAs. The other upside here is there is a huge vehicle base. There is a registered vehicle base of around 3,81,000. This is as per the RTO Parivahan website. Out of this 3,81,000 vehicles, there are around 2 lakh cars, more than 1 lakh trucks, and around 15 to 16,000 autos, and rest are buses and other commercial vehicles. One good thing about this GA is that there are 5 national highways and 7 state highways passing through either Namakkal and Trichy area, and so that brings that shows that there is a huge upside in the CNG demand potential, and there are industrial clusters also and there are industrial areas like Tiruchi, Mussoorie, Nasipuram, and outside the Trichy city there are a lot of industries. So there is a potential of selling industrial PNG to industries also in this area. The demand overview here is that right now we are operating around 5 CNG stations over there. We have just started our operations, but because of the huge registered vehicle base, once we set up our CNG stations across this geography, we have reasonably confident that this CNG demand will grow. In FY 2024, this year we'll be doing exit volume of 80,000 SCM, and this volume will increase to 4,47,000 SCM by FY 27, out of which 70% of the sales will be coming from the CNG segment. Around 3,30,000 SCM will be the CNG sales. So because of the lucrative GA, we expect that the volume will grow by a CAGR of more than 75% in the next 4 years. We have reasons for this volume upside because of the geography, because of the location, and excellent road connectivity in the state of Tamil Nadu, and also this area, especially the other Namakkal area, is also called the transportation hub of South India, where there are a lot of MHCVs and LCVs which have expressed their willingness to switch on to CNG as a fuel. Just to share with you that the alternate fuels like petrol, diesel are quite highly priced in the state of Tamil Nadu. Petrol is sold at 106 rupees and diesel is sold at around 95 to 96 rupees. So our price offering will be considerably lower there. So that will really push the CNG ecosystem and CNG retrofitment and new CNG car sales in this area. And along with this, there is a key anchor customer outside Trichy city, which is Bharat Heavy Electricals Limited. Our pipeline laying work towards this key anchor customer has already started, and we will be connecting this customer by Q4 end. And the daily contract demand of this customer will be more than 50,000 SCM.
In terms of demand, in FY23, Banaskantha contributed 37% of our total volume. Fatehgarh contributed 59% of our total volume, and Divan-Gir Somnath contributed 4% of our total volume. In terms of segmental share, in FY23, CNG contributed 43% of the total volume. PNG Industries contributed 55% of the total volume, and 2% was contributed by PNG Domestic. In terms of gas sourcing arrangements, as we highlighted earlier, we have a mid to long-term sourcing arrangements with GAIL, Reliance, BP to cater the demand of industrial and commercial PNG. We also have a proprietary membership with IGX platform, which is a gas exchange platform. And whenever we require any volume on spot or when we have a surplus volume, we trade those volumes on the IGX platform. We also have a MOU with Shizuoka Gas since they have access to cheaper gas from their long-term sourcing arrangements with Qatar, Indonesia, Thailand, and Australia. They are also operating a LNG terminal in Shizuoka, Japan, where not only they have a receiving facility, but also they have a loading facility. And we are contemplating if they can divert some volume from their outsource the long-term sourcing arrangements to India at a competitive price, not only to cater the demand of IRM, but also to cater to the demand of other CGD and other bulk customers. The gas requirement for CNG and PNG domestic is allocated by government through APM and SPST, and we are getting the subsidized gas from government. So, gentlemen, this is how our CNG stations look like. These are our dealer-owned, dealer-operated CNG outlets, wherein we have EV chargers also being installed, and we going forward we will have facilities for EV charging at all our dealer-owned, dealer-operated CNG stations. These are our marquee CNG outlets, and why we chose to have more Dodo outlet is that it not only helps us in branding, but also it helps us in higher margin, because to OMC outlets we have to pay higher dealer margin, whereas in our case we pay a lower dealer margin. So that helps us in higher profitability also. As we highlighted earlier, we have a strong parentage coming up from Cadila Pharmaceuticals, who have a more than 3 decades long experience. They have provided strategical and financial support as and when required, and we also take help from their shared services of HR, IT, and taxation. We also have a participation from Shizuoka Gas, which we highlighted earlier. In terms of operational and financial parameters, our volumes have been consistently growing. We did an average volume of a total volume of around 63 MMSCM in FY21, which grew to 196 MMSCM in FY23. In Q1 FY24, we did a total volume of around 45 MMSCM. Our revenues also have grown significantly from 190 crores in FY21 to 980 crores in FY23. We did a revenue of close to 230 crores in FY21, FY24 Q1. The EBITDA margins also have improved from FY21 to FY22. We did a EBITDA margin of 200 crore. In FY23, the margins was impacted due to the higher input gas cost resultant due to Ukraine-Russia war. In Q1, the margin have improved. If we compare on an EBITDA per SCM basis, we did a EBITDA per SCM of close to 9 rupees in Q1. In Q3, it was around 6 rupees. So we have already improved on the EBITDA margins. The PAT also have increased from 34 crores to 128 crores in FY22. It dipped to 63 crore because of the higher input cost. And in Q1, we did a PAT of around 27 crores. We have a healthy ROE and ROCE ratios. In terms of experience board, as we highlighted earlier, we are guided by a very distinguished board led by Mr. Maheshwar Sahu, who is a chairman and non-executive director, who is an ex-bureaucrat, and he lastly held the position of additional chief secretary, industries and mines in government of Gujarat. He is known for executing the initial 4 vibrant Gujarat summit under the then chief minister of Mr. Narendra Modi, who is now the Honorable Prime Minister. He is also on the board of many reputed companies, including Maruti Suzuki and Gujarat Ambuja. We have Mr. Rajiv Modi, who is the CMD of Cadila Pharma and has also more than 30 years of entrepreneurship experience. We have 4 independent directors, including Mr. Tiwari. He is also an ex-bureaucrat and lastly held the position of Additional Chief Secretary, Home Affairs in Government of Gujarat. He was the CMD of Gujarat GNFC, GSFC, and GSEL. We have Mr. Gopal, who has 35 years of experience in banking sector. We have Mr. Nayak, who was the CMD of Powergrid Corporation. We have Woman Director, Mrs. Gorodia, who is entrepreneur in herself and also sits on the board of Sabarmati Gas as independent director, based out in Gujarat only. We have two representative directors, Mr. Banerjee and Mr. Mahapatra. In terms of execution team, alongside Mr. Karan and myself, we have four team members. Mr. Prashant Sagar, who is Chief Operating Officer and is looking after the PNG project and O&M part. He has more than 13 years of CGD experience and earlier was associated with Sabarmati Gas and Haryana City Gas. We have Mr. Raghuveer Solanki, who is Executive VP and handling the marketing and commercial profile. He has also more than 15 years of experience in oil and gas industry and he was associated with Sabarmati Gas and Haryana City Gas. We have Mr. Manas Khare, who has also 14 years of experience in oil and gas industry. He looks after the CNG project and O&M part of the business and he was associated with Mahanagar Gas, Sabarmati Gas and Haryana City Gas. We have Mr. Prakash Sinha, who has also 16 years of experience in oil and gas industry and he looks after the technical and HSE part of the business and he was associated with Sabarmati Gas in oil and gas industry. So with this, we conclude the presentation and we look forward for any Q&A from the distinguished members.
Yeah. Yeah. Thank you, Harshal and Ms. Kaushal, for a very detailed presentation. I think you covered most of the aspects of the operations and business of the company. Now, participants, whoever wants to ask any questions can raise the questions in the respective boxes. We will wait for some time for questions to be raised. In the meanwhile, can I ask a couple of questions?
Yes.
So now Shiz Gas currently has a 4% stake, right, in the company?
So Shizuka Gas is currently owning 2.94% stake in the company.
2.9%. Okay, Shizuka Gas. Now, the company is a very large company in Japan, right? As you said, one of the fourth largest player. So for them, this is a very small investment. So how do we sort of explain this small investment, and are we looking for a higher stake by them going forward, or higher involvement by them going forward?
Yes, Deepak, they have expressed their willingness to be involved in the company operations, and this is a strategic technical tie-up because it's not we cannot see from the lens of financial investments, right? Since they have a huge capability in terms of industrial business side, they have access to the technology in terms of the right burners, automation, system engineering, and they had encountered such story 30 years back in Japan, where they converted these industries from polluting fuel to natural gas. And also on a strategic side, Japanese companies have recently picked up stakes in Indian City Gas Distribution Company and Shizuka Gas. They were on a lookout to invest in this sector, and they chose IRM Energy to be their partners, because after doing a lot of due diligence, this due diligence happened for a good 1 year. So, and going forward, they want to increase their stake. As we speak, we have a joint technical committee, and they are sending some of their low to middle level managers here to work with us full time to push this technical collaborations and help our industrial customers to improve their gas usage efficiency.
Okay. So please continue.
Hello.
Yes.
Yeah, you can hear us, right? Okay. So now the follow-up question is Shizuka Gas. are they currently helping you source gas, or are there any plans to use their contacts, networks, etc., to sort of optimize our gas procurement?
Yes, sir. These are the part of our future plans. They have access to very good gas contracts, and since they are 10 times bigger than us, their daily sales volume is around 40 lakhs SCM per day, which is 4 SCM. And for that, they have entered into very good contracts with countries like Qatar and Australia and Papua Guinea. So they have expressed their willingness if there is a firm demand coming in from IRM Energy and also the other big industrial customers in India. They have expressed their willingness to divert some of these volumes at a competitive price. So these are things which we are exploring. But the good thing here is that they are willing IRM Energy to use these contracts and optimize the gas cost. So these are some of our future plans.
Okay, good. There is one question from Mr. Arunab Tripathi. How does the management justify relatively higher valuation compared to peers?
So in terms of valuation, we have priced our valuation at an attractive level. While we don't want to compare ourselves with the peers, but we have a growth story associated with our performance. Our volumes have grown by 68% CAGR between 2020 to 2023, and we are still in the process wherein our volumes will grow threefold from 0.54 to 1.51 MMSCM in FY27. So this kind of growth is not visible in the listed peers, where the volume has stagnated. Further, the valuation, while they may be comparing our valuation with the current PE, but all the listed peers have a valuation based on their forward multiples. While we cannot discuss our forward numbers because of the SEBI regulations, but once our performance will come, people and investors will see that our valuation is quite attractive compared to the listed peers at this level itself.
Okay, great.
Okay. There is one more question. Due to volatility in the global gas prices, how does IRM ensure the price stability?
Yeah, there was a volatility in FY23, and we learned from it, and we chose to enter into contracts for domestic gas. So right now, out of the 350,000 SCM of the contracts which we are having, around 85% of the contracts are where the domestic gas will be supplied to us by all the leading suppliers. And there was because of the contractual term, this domestic gas is subject to a ceiling. There is a ceiling coming in from the government of India every 6 months, and so that gives us assurance that this price will not go beyond a certain level. So there is a visit, even if there is a global upheaval, sometimes there is a war or something, but the prices will be kept in check. So that is how our gas sourcing has been. It is very prudent, and we are not relying upon spot volumes. 100% of as we speak, as on today, 100% of our gas supply is through a contract, not through a spot. So that volatility in the global gas markets, we are hedged from it.
Now there is one more question from Pradeep Raj. Will you clarify more regarding that in spite of increase in revenue from 22 to 23, your net profit fell?
Yes, so both FY22 and FY23 were an aberration years. FY22 was on a positive side, FY23 was on a negative side. In FY22, the LNG prices were at rock bottom. So all the oil and gas companies and CGD companies made a windfall in FY23 because of the Ukraine-Russia war. The prices of gas skyrocketed, and the gas which was available at below $10, it went up as high as $40. So we also hit by the increase in the gas prices. And one more thing, in FY23, as Karan ji highlighted, we had a NGT order in our favor. So we were in the process of transition all the customers who were using coal, FO and petcoke to come on natural gas. And in order to promote and push our network and rollout, we strategically decided not to pass on the 100% increase in cost, and we operated in margin. But this scenario has now improved, and in Q1 we have delivered better margin than FY 2023. But still, it is not comparable with FY22 because, as I explained, FY22 was a relatively aberration year in terms of margins. But we will try and thrive to hit a double-digit EBITDA margin as we move forward, and we are in the constant lookout to optimize our operations to boost our margins. So in terms of EBITDA per HCM, if you will compare our historical numbers, it has always performed better than the industry peers, including Gujarat Gas, IGL, Adani Total. Mahanagar Gas has a different story because they have 70-75% volume coming from the CNG segment, which is a high CNG margin segment. So they have performed better in terms of the blended margins. But regarding other peers, we have outperformed them in terms of demand growth and the EBITDA per HCM numbers historically.
Okay. Now, there is one more question from Arunabh Tripathi. Management informs that there is a differential between petrol, diesel versus CNG. Does the management have any guidance on the price advantage for CNG going forward?
We can give a guidance that there will always be a differential of around 15 to 20% between the alternate expensive fuel like petrol and diesel vis-a-vis CNG in all our geographical areas.
In terms of CNG pricing, there is a visibility that at least for 2 years the prices should be at around this level, because government has in April 2023 announced a pricing guidelines wherein the APM prices have been fixed at $6.50 upper ceiling and lower floor of $4. And this $6.50 also pricing is linked to 10% of our Indian crude basket. So in case if the Indian crude basket stays above $65, we will be priced $6.50 only and will not be priced higher price. And after 2 years also, this $6.50 will be increased by only $0.25 per MMBTU. So there is a visibility in terms of availability of cheaper gas, which will ensure that the CNG prices will stay at around this price. The fuel prices of diesel and petrol will always be linked to the global crude basket, and at current level, we don't foresee the prices going down significantly. So there will always be a delta of around 15 to 20% compared to CNG if we talk about alternate fuels, petrol and diesel.
I also have a question. There is a question here. Due to this electric motors that is fast coming into the market, and where we will be saving on petrol and diesel and then CNG. So how do you think you're going to get into that competition of electric motors, or do you see that it is not your competitor?
Thank you, ma'am. Thank you for that question. If just the way we explain our geographies, we are in the heartland of the country. We are not in the metro centers, and in the metro centers there is a public transport system prevailing there, which is at a risk of being converted into an EV fleet. And this kind of a story is panning out in Delhi, in Bombay, and other metro centers where the public transport is a low-hanging fruit for the EV ecosystem to come. And the charging infrastructure is easier to set up in a bigger city. But in a area where we operate, where there are no high-rise building, no malls, and the charging infrastructure is very difficult to come by. If we foresee that, and there is no public transport available there is no buses or autos which are flying in these smaller cities. So we see that EV ecosystem will take a fair amount of time to do a significant contribution. So it will take at least a decade to have any significant dent in our sales volume. This is an area where CNG ecosystem is developing, and where the primary choice of any first-time buyer is a CNG car, especially in Gujarat. So yes, there is a threat in bigger cities, but not in the heartland of the country.
Now, there is one question from Mr. Ajumal Khan. Is there a future plan for any states other than Tamil Nadu? And what are the plans for future geographic areas? And are there any lucrative areas left?
Yes, thank you, Mr. Khan. Yeah, we want to grow this company into at least a 5GA company, and there are plans to bid aggressively in the forthcoming bidding round, which was announced 3-4 days back by the regulator PNGRB. The states are in the northeastern part of India and also Jammu and Kashmir. We'll see where to bid for aggressively, but we will be on a lookout of adding new geographical areas to our current kitty. And there is also a possibility of inorganic growth, where we'll see whether we can acquire any nearby geographical area to our existing geographical areas, which is in terms of synergy and business allied. And yes, the 98% of the geographical area have already been bid out, but there is a new bidding round and also possibility of inorganic growth.
Yeah. So, any plans currently on M&A or inorganic growth which you would like to share at this point, or it's too early?
So we are bound by SEBI guidance. We cannot disclose it, but yes, we are looking at a couple of areas, and possibly we can go through on it.
There is one more question here. Is there an open market gas sourcing to IRM Energy? If yes, can you please give a percentage of such?
So what is the
Ma'am,
proportion of open market gas currently?
We could not get the question. Can you repeat?
What is the proportion of open market gas sourcing currently by the company?
So in terms of gas sourcing, as we mentioned, we are not buying any spot volume. All our requirement are currently being tied up 100% from our contracted volumes. In terms of contracted volumes also, close to 80% volume is the domestic gas produced from the high pressure, high temperature fields of ONGC and Reliance. And we are buying only minor volumes from GAIL India, who are buying LNG from global markets and then retailing it into India. So we are not having any significant exposure in terms of sourcing RLNG from the global market, also from the intermediaries like GAIL.
Okay. Now, do we have any visibility of EBITDA per MSSCM over the next 2 or 3 years?
So as per the SEBI regulation, as per the SEBI regulation, we will not be able to give any forward looking statements. But in Q1, we have delivered 9 rupees per SCM, and that is the historical number which we can discuss right now.
Reasonably confident that we will be at least at this level, if not better.
Yes.
I think we are done with most of the questions. So thank you both of you, and over to Sharmila for the closing.
Yeah. Thank you all, and it was really a good session, enlightened session on the IRM. Now we really have this open on all our platforms on HDFC Securities as well as HDFC Sky. We have it online through our mobile, through the UPI system. So requesting all of you all, this issue opens on the 18th of October, and we look forward to a great subscription, because invest in companies which will really help you give some good returns as a long-term perspective. Thank you, and if any queries, you can definitely call HDFC Securities customer care, or call up your RM to help you. We're always there. Thank you so much, and thank you the distinguished guest from IRM Energy taking out their time to address our customers on the IPO. Thank you very much, and thank you, Mr. Deepak Jasani, for your insights on the IPO.
Thank you. Thank you, everyone. Right.
Thank you.
Bye.
Mhm.